This would be my very low stress, low management, mostly hands-off ETF portfolio if I was investing $100,000. First of all, I would not invest $100,000 all at once. I like dollar cost averaging, especially with the market at all-time highs. You would simply take the amount that you want to invest, say $100,000, divide it by the time that you would like to have that money allocated, say 3 months, and invest the same amount of money into these ETFs every single week. This way you have an average price after that 3 months period of time because you don't know if the market's going to go up or down. So if there are some risk with this, you could get a higher and higher average price as the market goes up, but if it retraces and you buy shares after it's below your average price, you actually get a better average price. So I prefer dollar cost averaging again because we are at all-time highs. Finally, if you don't have $100,000 to invest, which is an incredible money, a very respectable amount of money to not just have saved up, but to be investing with, the principles remain the same. If you only have $10,000, $25,000, $50,000 to invest, you can invest the same allocations as you would $100,000, and your returns would quite literally mirror what $100,000 would be. The first ETF I would pick to invest in would be VTI, Vanguard Total Stock Market. This is a broad diversification of the entire stock market. You would own essentially all of the stocks with this one ETF, and I'd put in 50% of whatever money you are wanting to allocate towards it. The next ETF I would invest in would be 20% into VXUS. This is the Vanguard International Stock Market Fund. This will give you international diversification and not rely on the US alone. VTI is great for a broad stock market index, but VXUS takes away the reliance of the US stock market and gives you more broad international exposure, giving you exposure to some emerging markets which have been very good as of late, and again, just taking away some of the onus of just US stocks. Next, I would do 20% into VGT. This is kind of a derivative of Vanguard mimicking QQQ. It's a technology ETF essentially, and it is very aggressive. VTI and VXUS are, for lack of, honestly, mostly conservative. VGT gives you a little bit of risk with some pretty aggressive growth. So you're going to see a lot more fluctuation in owning VGT, but you're probably going to see the majority of your growth in your portfolio coming from VGT. So you've got 50% in VTI, 20% in VXUS, and 20% in VGT. All of these are Vanguard products, and all of them have very low cost bases. Next, and I would use this more as just a place to park your cash, so you don't just have cash sitting idly by doing nothing, but I would put 5%, so $5,000, into a short-term bond or treasury ETF gaining whatever those yields are, either AGG or SGov. Most of these are extremely liquid, so you can kind of buy and sell them like you would a stock, and if you want to get into some more shares of whatever ETF you have, you could just sell some of this. But I would put 5% into a short-term treasury or bond ETF, again, AGG or SGOV. And then finally, I would allocate 5%, a very small amount, towards individual stock picks, just in case that you feel like you've got a hunch about a stock. You could invest in a stock or two for a couple shares and potentially get some growth and just realize what it's like to see some of the volatility and some of the stock movement of owning an individual stock, whether that be Tesla, Google, Amazon, SpaceX, right? Having a little bit of money aside will scratch that itch of, I wonder if I can beat the stock market on an average basis. So I'm going to pick this one or two stocks. $5,000 will give you the ability to basically buy a few shares of any meaningful company that's out there. And again, scratch that itch. But that is how I would invest, in this $100,000 portfolio is 50% towards VTI, 20% towards VXUS, 20% towards VGT, 5% towards a short-term bond or treasury ETF, and then 5% towards whatever stock that you feel like owning at the time. Hope that helps, and let me know if you have any questions.